I have seen sellers, they try to set up an individual spreadsheet and just track their top sellers. That's still a lot. But what if you could just see like a dashboard? And that's what I'm going to drive at today.
I love
Just
how you put together like, hey, these are the things that are helpful. Cause I know even as someone who's in data in a different way, maybe not accounting, but in the ads, there's so many different numbers to look at. You can almost get lost. So I really like this breakdown of like, okay, so here's the kind of basic factors that you should be looking at, like you said, daily, weekly, to really make sense of all the numbers. Welcome back. I have a treat. So if you've been watching these, we had called them action insights. Now we're calling them expert interviews. It's where we go through a topic that is highly important to someone as an Amazon seller that I am not the expert on. So I bring you an expert who knows their stuff on said topic. And normally I have a series of questions we ask. Today, we're actually going to get even more in depth around the topic of accounting in Amazon businesses, cash flow, profit margins, how you should be thinking about it, how you should be calculating it, and how to figure out what your true numbers are. So I am super excited to have Teresa Henry, owner of AccuPro Bookkeeping. We connected somewhere along the lines on LinkedIn, and she has some really great insights into, again, accounting for specifically for Amazon businesses. She's got a lot of knowledge, and I'm super excited for her to share that with you all today.
thanks. Thanks, Elizabeth. I'm so excited to be here, and hopefully we're going to have some valuable takeaways here for everybody.
Yeah, absolutely. First of all, how did you get into accounting? Give us a little bit of your background, who you are.
Oh, yeah, sure. Well, I've got this bookkeeping business. It's AccuPro Bookkeeping. I'm a former commercial loan compliance officer with 20 years experience in credit and lending. I help small business owners, particularly I've niched down to Amazon sellers, grow and scale their Amazon businesses. I've got a degree in finance. I'm a member of the American Institute of Professional Bookkeepers, and I'm a QuickBooks Online Pro Advisor. So it's basically a numbers nerd, but I can get you in the right direction where you need to go.
Yeah, I love it. I've been, as ads take out a piece of the profit, so I've been digging more into profits, but whenever I talk about it, you will hear me say, I am not an accountant. This is how I understand the numbers to work, at least from the ad piece being taken out. But if you actually want to know your numbers, you should probably go either find a software, like you were saying, or you should know the basics of how your cash flow works. And so I'm super excited to actually have an accountant to be able to share
Thank you.
really what you should be looking at so you don't have to listen to people who are, I'll be honest, somewhat ignorant like me.
Oh, no, that's fantastic. I say same. I'm a bookkeeper. Like, for instance, I don't know a thing about websites. Why would I even want to start messing around with that? I've paid someone to build the website. There are just certain things that you need an expert to do. I don't even want to comment on topics that I don't know about.
Awesome. You have a presentation for us today, you were saying.
Yeah,
You have a whole slide deck you're going to take us through, as well as I think some examples.
yeah.
Um,
Yeah, let's go ahead and hop in, and I'll try to keep this, might be moving the screen a little bit looking here, but let's just go ahead and I'm going to do a screen share. The slideshow has started.
yes,
Okay.
I can see it.
So Amazon sellers really need to be financially savvy. Just like what you were talking about, Elizabeth, there is so much going on. There is such a squeeze on profit margins right now. Okay, here is a current list of Amazon selling expenses. And mind you, this is just top tier. These are the top levels. There are over 300 as of this date Amazon expenses right now. Up here, you should see this, the Amazon selling expenses. These are just some of the current headings for Amazon expenses right now. There are over 300 subcategories. It's a lot. And all of this is putting pressure on the seller. So fees and expenses create tight margin, and they're already tight enough. So what can we do? We need to be savvy. And what I mean by this is we need to understand some key information. And that's what I'm going to try to impart today, that you can walk away with just some key numbers so that you can avoid at least some of this pressure on your financials. And there are tons of Amazon reporting out there. I love starting with the Amazon reports. Some of their information is, there is tons of data on how your products are doing. Dig into that. This is all part of the quantitative factors that you need to know, especially with your Amazon sales. But that's not the end of it. You need to keep looking at these numbers. And honestly, if you have more than 20 products in your product line, and I think most sellers that I work with do, looking at these on an individual basis gets really frustrating quickly.
I would definitely agree.
Yeah, it's impossible. I have seen sellers they try to set up an individual spreadsheet and just track the first 20 sellers, their top sellers. That's still a lot. But what if you could just see like a dashboard? And that's what I'm going to drive at today. Just a simple dashboard, a simple tool where you could see all of this information. And what would be included on this dashboard? I'm going to get just a little bit technical here for a moment, if you could hear me out. We're going to look at some qualitative factors. And these are the factors that you as the business owner specifically know. They are where your market is. The Amazon seller knows supply chain issues. They can understand seasonality in the product. They understand their competition, especially there's so many new entrants. I forget the number. You probably are more up to speed on this, but the number of new entrants into Amazon a day is astounding. I think I've heard it 4,000 people a day are coming in, and that's just at all levels. I mean, I'm talking retail arbitrage from, the very beginning. It's a huge number. And these are all called qualitative. They're not something that we can truly measure, that you can put a number on, that you need to understand this as part of your business plan. And a SWOT analysis. If you haven't done that yet, sit down and put that together. It is so helpful to have your SWOT analysis right in front of you during whether you're looking at your financials daily. I recommend it daily, but at a minimum weekly, and see where you're getting hit on this.
I love how you put together like, hey, these are the things that are helpful. Because I know even as someone who's in data in a different way, maybe not accounting, but in the ads, there's so many different numbers to look at there. You can almost get lost. So I really like this breakdown of like, okay, so here's the kind of basic factors that you should be looking at, like you said, daily, weekly, to really make sense of all the numbers.
That's what it's just funneling down. It's a constant process. As you get more and more comfortable with your business, you're going to find these are going to change over time too. But you're right. There's so much noise out there too. And it's just concentrating on the basics. And I'll talk about that too. Everybody hears about that 80-20 rule. It's 80% of your revenue is driven from just 20% of these factors. Focus on that. And just a little bit, this is where I come in. This is the quant analysis. And these are actual measurable results. And we're going to build a forecast based off of a rolling 12-month history. So that is the only caveat. Get started on this. You need to have some look back numbers, not just month to month, but year on year. And my example, we're going to have 12 months, January through December, because that's where we are right now too. It's kind of perfect timing. And these are just some other quantitative factors you can look at.
And for those, do you look at them on a product level? You look at them on account level? You look at them on both levels?
That's a good question. I'm looking at my quantitative factors. This is going to be at the whole level. So this is going to be holistic. I'm going to show you when we do the dashboard, it's going to be at the product level. So it's a little bit of both. And that's the most accessible way to look at it. So I'm jumping ahead. I'll get to that in a second. So how do we create the dashboard? We start with a 12-month rolling. My example was taken directly out of a QuickBooks Online sample company. And I'm not pushing QuickBooks Online. That just happens to be what I'm certified in. And whatever software you're using is fine, Wave, Xero. And if you don't even have that, you just need an Excel spreadsheet. And I've got a link here that we can hand out. It's a free one from Intuit. I do want to comment right here, though. This is a good point for me to stop. There are apps that you can use that do this forecasting. LiveFlow is a good example. That one links to QuickBooks Online. And that's just one example. I've worked with these over the years in banking. The problem with any of these, it's great. As you absolutely need to have LivePlan or one of those. Call it LiveFlow. Sorry, it's LivePlan. And I'm not pushing I don't get paid for any of this. It's just the biggest one that's out there. The problem is if you don't understand what you're looking at, the software is not going to help you at all. If you're just looking at a program and say, well, I pushed the wrong button and it says my sales growth stops, you've done yourself a big disservice. So that's what all this process is about. I'm showing you some basic tools. Everybody needs them. Knowledge is power, right?
Yeah.
So it's real simple. These are the steps to create the forecast. And instead of reading this, I'm just going to show you. You basically take a 12-month history, create an average, and weed out anomalies. Let's just look at it instead of reading about it. So hopefully the screen share is showing a little Excel spreadsheet up on the screen. So this is it's just a rolling 12-month income statement. I've added a total and then an average, and I've picked up a few percentages here. And on the top line, really what I'm looking at, now these are just his gross revenues, and you can see he's got a few other, I don't even want to include these in here. He's also doing some Walmart marketplace. We're just going to focus on Amazon. Okay, and you can tell that this is not a real company because his high sale was in March of 2022. I think the majority of even all of my clients, they had their high sales here in December. But we'll work with this. We'll just say the high sales were in March, and he's having some lower production in July. And that's explainable too, because in this example, the pretend customer takes vacation and he turns off sales during that month. He's not active on his Amazon account. And this is a pretty clean scenario. I cleaned it up for the presentation. Everything is really in line. He's taking out a reasonable owner's salary, and I'm seeing his insurance expenses look good. And I'm also paying attention to his advertising fees. I'm expecting he better be spending his highest amount in advertising because you need this to grow the company. This should be your biggest expense item.
I love how you also put in like all of the other fees that are business operations. I think that's one thing that a lot of Amazon sellers, like you are running a business. There are some amazing tools that allow you to pull from the accounting API and they clean up everything. You can input your cost of goods and that will give you maybe a first bottom line. It's taking out, like you said, the ad fees and such. But what those tools don't have access to and aren't calculating for you are what kind of salary are you taking out? Do you have insurance fees? What other just regular business fees, business tools that you're paying for, etc. Those are technically taken out of the business. And what you're saying is you need to know your actual numbers instead of looking at maybe the first number and saying, oh yeah, we're totally good.
Yeah, I think I see a lot of this on a lot of the conversations I'm seeing and with my clients let's be honest, a lot of people are new entrants here. So a lot of these are startups. You need to consider, yes, just what you're saying, Elizabeth, they are making this amount at the top. And yes, this is awesome. If you can make it here, that's awesome. But we need more importantly is this number here. The most important number, as a matter of fact, your number one KPI should be profit margin, net profit margin. Sometimes it's called that, but it's this bottom line. It's what you're keeping in the business because this is what you're rolling back into the business. And as a lot of these companies do, it's bootstrap. You're just going to take that number and roll it back into the company. But hopefully we're also doing this that has a better quality of life. A lot of people, this is a supplement. Let's enjoy life with this and take it out as owner's distribution and take a nice vacation with the family, something. You definitely want to focus on this number here on the bottom. Okay, I'm going to move on because this is ugly and this is not something I want to look at every day when I come into work. The next tab is I built a little stress test. This is optional, but I love doing a stress test at a minimum. I want to know what my break-even revenues are for the year. And I'm just going to assume that my base projection, this column here, is just, I'm good with those averages and I'm going to stick with that. And a lot of people are going to argue with me. My friends in finance will say, you didn't use a mean or a median or mode, or I'm not going to get all quant on this. This is just very basic. This works. And this is on the back of a napkin.
So you're saying, just to clarify, so I know what we're talking about. So if you have the last 12 months, you're just taking a strict average of everything that happened in the 12 months and you're inputting it there and you say, hey, let's just get simple. Let's look at our averages for the last 12 months and then we can start to build models off of that.
That's it, exactly. Especially if this was just your first year in business. Now, the only thing I would say, if this was your first year in business, you're going to have a lot of ramp up expenses. You might want to back those out, stuff like that. Take it with a grain of salt.
Yeah.
But yes, start with something. Anything is better than nothing. And this is just extremely basic. But I'll say this thing too for the stock people, for the investment people. Past performance is not indicative of future performance. I mean, I don't have a crystal ball either. That's another reason to do some of this stress testing, right? If we know what our break-even revenues are, and just maybe everybody doesn't know what break-even revenue is. It's the intersection where your revenues meet your operating expenses and they're at zero. So that means on day one of January 1st, you know, in this example here, that this ABC Inc. has to generate $51,700 a month to cover their I'm sorry, I've got to say this right. The total income, we'll start here, total income. Okay, they have to generate at least 166 so that they're covering cost of goods sold and their operating expenses.
Got it. And so you're also looking at, like, you have all the expenses in there, like we talked about on the first slide. Like, you're taking out salaries and wages, so you hopefully are getting paid off of your, again, what you're doing in the business. So this is just saying, if you were running it lean and you had no more money to reinvest into the business, so you don't have anything at the end of the day to be able to like reinvest and grow the business, what would you at least have to do to like maintain status quo?
Yeah, if you're in emergency status, there's a lot you could cut out of here if you're going to be really operating lean. This is really nice. But honestly, as an aside, not enough people are taking out a living salary. Take out that living wage. We're doing this for a reason. You don't want to be trapped in this business. Enjoy a livable wage. And also your accountants are going to, or a tax person will end up telling you they want to see this too, because the IRS wants to see a livable wage on here too. Not that we're going into an audit talk, but that is definitely something to consider. So again, the stress test is optional, but I like to see it. I mean, I like to see it. What if I take a cut on revenues? I just did real basic cuts in here where revenues drop 3%. What if cost of goods sold go up 3%? What if my operating expenses go up 3%? And you can move these levers any way you want. This is just for an example. But at a minimum, run your break-even analysis. I would just run that. If you're just going to do bare bones off of this, what you've learned anything off this presentation today is run your average income and run a break-even analysis. Right. And that's enough of this stuff. Let's look at some let's see how we can put this together.
Do you mind if I ask one more question?
No.
Because again, I'm ignorant in these things. Is there a reason why you chose a 3% stress test? Is that kind of standard?
When I worked at the bank, we would do it at 5%. I mean, and I would hit them with a couple of things all at once. It's really not that conservative. And always inflation adjustment is in there. So you know that, but I don't want to get too technical on this. 3% is a good start.
Okay, I was curious because I'm not a expert on like forecast models or the stress testing. I'm totally going to Google stress testing after this and see how I can apply it to models that I'm working on.
Awesome.
But I appreciate the share.
Awesome. Yeah, a good question. Okay, this is what I get excited about. This is just a dashboard, and this is a lot like the dashboards I build for my client. And I love this because isn't this much easier to look at month end? Like this guy is looking at his dashboard for 12/31/2022. And how this works is this is the legend up here. These are his actuals. And then this is just what we set up for in our accountability meeting. The company has a profitability goal. They want to have a 3 to 5% profit margin. He doesn't have a specific revenue goal. He just wants to grow top revenues and operating expenses. He just wants to keep them in line. He wants to keep those right below break even. So he wants his OPEX to come in line. These are too vague, quite honestly, but this is just an example. What do you think of this so far?
I really like it. So when you say, I'm assuming the profitability goals, you're saying, okay, that's specific. Would you have an example of, okay, this is a better, less vague revenue goal?
Yeah.
This is maybe a good operating expenses goal.
I do. I'm going to move on to the next slide because I'm going to talk about this example with some very specific goals. So I made up an example company because this really isn't anything without that. So this one, the best KPIs, right, are the ones that are tailored for your business. And you want to use that qualitative data as best as you can. You want to get down to what it is per unit that these items are making. You want to do it at that level. You want to get to your top sellers and I really want to know how well that they're doing, but how it's impacting my overall market. So in this example, we're saying Josh owns a company called Barky Bowls, and he only sells dog food bowls. And he has 2 primary suppliers. He sells roughly the same amount of units each month, but he's noticing his profit margins are dropping, and he wants to know what he can do. So he is going to set up a very specific KPI. The first one is called average purchase value. So like I said, he is buying from 2 suppliers. The range is between $8.30 an item, and he instructs his VA not to buy above $8.30. And he wants to set up a very specific profit margin because he knows that his profits were all over the board last year. We'll say that last year his profit margin was 2.7% average. So he sets a specific profit margin goal for 3 to 5% for this year. So let's look and see how he did. Oh, here's the other variables. So he just said, and this again, pardon me, this is totally basic. We're just saying, I know there's a 10 more Amazon fees, but we're just going to say it's 15% of sales price for this month. And he's buying them at 10. And I'm sorry, he sells them at 10. He buys them at this round. He's buying them at 8. Let's see what this looks like. So again, here's the information that he's doing. He's purchasing these bowls from his supplier at 8. The Amazon fee is $1.50. So his total cost is $9.50 a unit. And this is just how his income statement would look like per unit. So he's getting a profit of 50 cents unit. That sounds pretty good, doesn't it? On 100 units, that would be $50. And actually, this is very good news because on the actuals, he bought it at 8. He's within his range. That's great on the dashboard. That is a 5% profit margin. Fantastic. He is already at the top end of his profit margin for that day. Now let's jump ahead. Let's say on January 12th, his supplier is charging him a little bit more for that bowl, that same bowl, but his VA is instructed she's only going to buy this as it goes up to $8.30 a unit. But that's where it stops. This is great. He still has a profit of 20 cents per unit. Not as strong. It's only a 2% profit margin. And this is where the dashboard really pays off. Okay, he is within the range. It's only okay right now because he's at that high end. Profitability is terrible. This is not acceptable at all. He just a 2% profit margin on this deal. He's not within his goal. It is a 60% drop in net profit over 2 days. He's dropped. If he continues at this pace, okay, he's checking this on January 12th. If he checks it, if he doesn't look at this again until December 31st, he's underwater from where he was last year. These little dashboards pay for themselves. These are gems. If he could be tracking, if his numbers are current every day, he can pull up this dashboard every morning when he comes in, make adjustments. I mean, he's asking himself, what should he do now? And the number one answer as an Amazon seller is you're not going to increase your price. So it's hard enough to state, you can't state you're not going to be in that buy box. So what options does he have? I'm so glad that he caught this right now. He's got a lot of options, actually. And let's just talk about some of them. We'll just jump ahead here. Okay, it was smart for him to put the caps on the spending, but he's got to act right now. Okay, he's going to have to look. That $8.30 range is going to be too high. Okay, the next scenario, maybe he should tweak this down to $8.10. What's that going to do to his margin? Can he negotiate better terms with his supplier? A lot of times when we saw the recession starting to hit, we saw some of our customers renegotiate these terms. After you have a year history with them, maybe they can open you up a little bit more and give you a better price on this. You can look for other suppliers, diversification. Everybody is always looking at other products that they can sell on Amazon. Can we look to something else and start testing that? Can you take a haircut on this short term? Maybe do something like the marketing companies do, have a loss leader come in and do something where you can take a hit very short term, but keep an eye on your dashboard to see how you're doing and just continue to play with this throughout the month until at the end of the month, you have a plan and you're staying within your KPI and adjusting as needed. It's constantly adjusting. Amazon's going to constantly adjust. Now, does this sound like it's going to be difficult? Yeah, it's going to take some effort, but you're worth it. This is your business. It's definitely worth it. And it's an investment in yourself. So that's all I have for the presentation. And I just wanted to thank you for this time, Elizabeth, and open it up if you had any other questions or if I totally confused you with these scenarios.
Yeah, no, I love how you took something like accounting that has a whole lot of numbers and things and yes, try to push it down to the first things and the things that are important. I also really like how you talked about keeping an eye on what your costs of goods are. As someone in the ad world, like you obviously built ads into your numbers, like they are an expense, they should be in there. But what we're finding is that a lot of times, and this is something that I've been talking about a lot, is when you're looking at your bottom line, a lot of times when trying to cut expenses, the ads are that's the first line that people will go to. When if the ads are only making up, say, a fraction of your expenses, but your cost of goods are the things that are really, like you said in your model, you're going from 8 to 30 cents. And on a macro level or micro level, rather, that might seem like, oh, it's only an additional 30 cents. But as you proved in your model, you went from $100 profit to $20 profit. That's quite significant for just moving something so small as 30
Right.
cents.
And honestly, when we're doing the bare bone slashing, there's just certain areas you don't want to. You've got to set your non-negotiables now. The number one expense should be your marketing expense. Actually, that guy's salary was probably too high in that example I showed you. That's nice to have that livable budget, but especially if you're a startup, years 1 through 3 are so crucial. A lot of companies I see just rolling that right back into the business. But that's neither here nor there. But if I'm really going to do some intent, here's a tip. This is what I've seen a lot. I've done some deep dives of the expenses, and it's in subscription costs. People have outrageous they're paying for Adobe and pay print, and it's crazy. Some of these things start adding up. Yeah, it's great. You set it and forget it. You don't need these things. There's other alternatives. I show this to my clients. You're paying Adobe $1,600 a year, and they're like, "What? I can use?"
Adds up.
Yeah, it's an eye opener. So start looking at other things. If you're going to start doing expense reductions, really marketing and advertising should be your number one expense, especially with Amazon.
Awesome. I really appreciate you breaking this down. Like I said, I'm definitely going to go look in the stress test models and things. I think there's a lot of value here for Amazon sellers who, again, probably don't take as close a look at their numbers as they should. For anyone interested in getting a hold of you, maybe to talk more about helping them out and figuring out their numbers, where should they do that?
You can find me on LinkedIn. That's probably my most active place. I'm on LinkedIn, Teresa Henry, AccuPro Bookkeeping.
Awesome. Yeah, we'll definitely put that link in the comments. And again, I really appreciate you being willing to come on and share this.
Thank you. I appreciate you taking the time, Elizabeth. Thank you for having me.